Phil, can you just walk us through some of the key trends that we've seen, particularly in Australia and New Zealand, coming out of the report that everyone will receive after this
Yeah,
webinar?
absolutely. Happy to, Glenn. Got your name right, so I'm happy. Good
Yeah.
start. Look, I guess, three key things from our perspective and what we're seeing in the report. And then this report obviously looks out from where we are today, but also looks out for a 5-year view and tries to give some predictions. And we've been doing it for a couple of years now. Look, I think one of the key things that we're seeing is that continued growth of the digital wallets, the use of those digital wallets, where people can add their cards inside the wallets and use them online or at point of sale. So we're still seeing that real continued growth there, explosive. The buy now, pay later story, obviously extremely hot in Australia and New Zealand, continues to be. We're seeing huge growth there, particularly online. And again, if you just think about the large players who are coming from this particular region, I think it's no surprise to see that their continued growth carries on. And I think the final point that we're seeing is, and again, it may not be a huge surprise, but I think when you see what we're saying is the delta for cash decline, we're seeing cash declining significantly globally, but in particular, we're seeing a huge, post-pandemic decline and predicting that to continue in Australia. Again, what's driven that? Obviously, online spend is up generally, but also as well, there's the use of contactless payments and digital payments is really starting to see that decline.
And Phil, I just want to maybe ask, just to be super clear, when we talk about digital wallets in the report, we are actually meaning either my iPhone or my Galaxy or whatever device as the payment method, regardless whether it is a debit account or a credit card off the back of that digital wallet?
That's exactly right, Glenn. Yeah, we call the digital wallet. So you do have the pure plays, I would say, where you've got the likes of Apple Pay or you've got the Samsung Pay. You've then also obviously got PayPal as a wallet. You've got, and if you think more broadly, I think it's probably easier to understand the broader context. If you think within the region, I'm based in Singapore. So, in Singapore, we have, I believe, over 30 different types of wallets. I couldn't name them if you tried, but so don't ask me, please. But that obviously then includes more and more things like the Alipays, the WeChat Pays, all of the different types of wallets. So you're absolutely right. And the funding method behind the back can be slightly different as well. It's not always cards.
Yeah. And we probably know it's not going to be cash.
Exactly.
Now, it's fascinating to see the differences, between Australia and New Zealand and the slight differences in some of the categories. How does this stack up to the rest of the world?
Yeah, look, I think what's interesting for me is, and I've been in this industry for some time now and had the fortune to work in Australia and here in Singapore, but still working on behalf of Australia from a WorldPay perspective. It's great to see that Australia and New Zealand are absolutely at the forefront of what we call sort of that shift towards alternative payment methods, those digital payment methods. And Australia and New Zealand are certainly leading the way in many places around the world. Globally today, though, wallets are number one. In Australia and New Zealand, we're seeing them around about number two, but we're predicting that will certainly grow in the future. I think as well, when you look at the regional number, the regional number is very high for Asia Pacific because of the weight of China and because of the weight of the wallet use that exists in China there. And, it's an extremely different market, but just to give you some context there, Alipay and WeChat Pay are well over 85-90% of all of the spend that exists in that market. So a long way to go for Australia and New Zealand, but still it's great to see that sort of digital journey. I think the one other place that Australia and New Zealand really stands out as a really fast adopter and continuing user obviously is in the buy now, pay later space. I know we're going to touch on that a little bit myself and in Adrian's comments as well, but it is a really fast growing space. Interestingly, Australia and New Zealand were predicting to have a reasonably high percentage in the online space, 14% for Australia, 17% for New Zealand. If you compare that globally, in the next sort of 4 or 5 years, we're predicting it'll be around about 5% globally, and a little bit less than 2% in Asia. Again, that's a huge sway because of the Chinese piece, but without doubt, the growth of the buy now, pay later in this particular region here in Australia and New Zealand is absolutely outpacing other places.
Yeah, that's fascinating. Now, I did promise that we'll try and make this session a little bit fun and engaging. I'm going to ask Liz to put up a little poll now, just so we can discuss and have a look at the what we're actually personally using, because I want to just see if it stacks up to what the report says. And I know everybody on this call isn't a full snapshot of the society that we live in, but I think it's very important to just see from our own experience if our experience stacks up to the report. So Liz, are you able to pull that poll up now? Oh, here we go. I might even do it myself. Okay, so you should be able to see that poll on your screen. The first question, which of the two payment methods do you prefer using for online purchases? I'm going to do that. And number two, which method you prefer using when you're in store? So so everyone just work your way through that. And interestingly enough, as you might know, I host a podcast called My Millennial Money, and we've got a large Facebook group. And I just thought, oh, let me just ask a group of millennials about how they use money in real life, so in a store. And I asked the same question to I basically sampled quickly 1,000 millennials, and I'll also share those results when we've finished the poll here. So have you got that? Here we go. You can start to see the results coming in. That's interesting, isn't it? Yeah, it's this common thread that cash is on the decline, and we can maybe plant that seed with Adrian for the part where he's going to be talking about, banks removing ATMs from the networks and whatnot. But I don't think there's any surprises there with me looking at this just from a snapshot of us. Phil, I would assume there's no surprises there for you based on us on the call.
No, not at all. Again, I mean, we obviously didn't give a buy now, pay later option on the questions, but I think when you look at the results in the survey and what I've talked about there, it doesn't surprise me at all. I think what would have been interesting is asking the question 4 or 5 years ago.
Yeah.
Again, would have been an extremely different set of results. And I think, that's just what we're seeing, right? Is this fast moving technology, digital payments coming into play. The fact that, telephones are so attached to our hands that, it's almost impossible not to use it. So yeah, it doesn't surprise me.
Now, the results that I put into 1,000 millennials just overnight, cash was 2%, which is interesting that Australia is predicted to go to cash at 2% in 2025. And we all know if we want to look at the future, we just look at the next generation of people, right? So that stacks up. And then physical card, so credit card or debit card, was the same as our group here at 42%, and the digital wallet was 56%. So huge trend, clear trend, all demographics that we are moving away from cash. Now, I want to move to digital wallets now, Phil. We are given a variety of different payment options, as we know. What is driving the actual shift to digital wallets? Because we've all traveled around the world pre-pandemic and now starting to travel. I mean, I was in China and I saw QR codes. However, I was in America 2 weeks ago, and some places don't even allow me to use a digital wallet at the point of sale. So what's driving the shift?
Yeah, look, it's an interesting one, right? I've traveled extensively this year as well, sort of through mainly Europe, mainly the US, and you do see a huge difference, right? And it's I actually haven't taken cash out on a single one of my 5 trips yet this year, which I'm kind of my mum's horrified with me when she needs cash, but anyway, I can't give it to her. I think, to be honest with you, it's that simplicity. I really do. I mean, for me, when I'm in a shop or when I'm online, it's kind of the final end of the transaction. You want to get out of there, you want to move on very quickly. So I think that simplicity that really streamlines the checkout is what we're all looking for. I think the piece to me that the reason why I personally feel comfortable, and when we speak to a lot of people as part of our research, there's also that advanced security, the fact that you're using your own biometrics, whether that's a fingerprint, whether that's your face, typically these days, because your card details are what's called tokenized inside the phone. So they are extremely secure. So I think people feeling secure and feeling convenient is really what's driving it. We touched earlier about funding sources, and I know we sort of, cash is sort of not necessarily a major funding source in the regions we're talking about. But if I look at some of the more sort of Southeast Asian countries, then being able to go to a 7-Eleven and use cash that I may have earned for an unbanked individual is actually a great option to fund. So I think having that flexible funding sources is also a reason that people are really starting to grow, to push behind this.
And remember, jump in if you've got any questions, anyone. Maybe you can put your hand up or whatnot so Liz can see. But another question on this wallet, the digital wallet thing, why do you think it's going to remain that when we are at a shop or we are physically, why are debit and credit cards going to remain higher than online? Do you think, is it more a habit? Like, I'm at a shop, so I get my card out, and then when I'm online, oh, I've got my PayPal linked. Like, is it a habit? Is it still just, this is what I do? Is there anything behind the reason why debit and credit and physical cards are looking to remain a higher thing for point of sale payments?
Look, I think you're right. I think there is an element of habit, but I think if you look at the online space, and I think if you look at how marketplaces around the world account for about 41% of all retail spend. So, they're a huge place. They have typically embedded in there some of their own wallets. So I think people, again, that is a reason for the online space continuing to grow. I think, I'm sitting here on my Mac, and I'm sure many people are as well, but, when I'm trying to make a payment online, it's built into the technology of my computer. It's just so simple. When I see, an Apple Pay or that links to something that I've got on a payment page, to me, I'm delighted. I know it's a quick, frictionless checkout. And I think you're absolutely right, though, around the habit. Again, I was in London last week, and I was deliberately trying to use my phone more often. But when you're on the tube and you're trying to tap in and out, sometimes it's a little bit of a pain because there's 1,000 people coming behind you. So I think there is a convenience factor of just being able to go bang with your card as well in certain places. And again, I think in some circumstances you may just be at a cafe, or it may be the local supermarket. I think there is a habit, but it's quite clear that we're moving in that direction, because I think when people start to use contactless like we're seeing today, and the convenience, it's a very short step to being able to use the phone as well.
And finally, we know that cash is declining. There is a lot of chatter online, and particularly in the money world, about those who do not have access to technology being left out. I mean, I like to think I'm across a lot of society and personal finance, and we might have one end of the spectrum, older Australians, older New Zealanders who aren't used to the digital stuff. But then on the other side of the ledger, it could be people that might be sleeping rough or just in a disadvantaged space for no reason of their own. What are we thinking around the disadvantaged and those who aren't used to this digital world when it comes to declining cash?
It's a really valid point, and I think we're very quick to point out that we don't see cash vanishing. Cash will always have a place in certain segments of society, and I think you've hit the nail on the head on a number of areas there where cash will continue to be a part of their lives. I think what we're seeing, though, obviously, is that change and that drive in many places away from cash. And I think technology does offer lower barriers of entry for people. Again, I appreciate there are always parts of that spectrum that may not necessarily have full access, but I think technology really may end up boosting inclusion in many places. And I've talked about areas of Southeast Asia where you have examples of farmers who will work for cash, will use that cash, add it to a digital wallet, and will then be able to actually be part of the digital revolution and be able to sort of use that funds online. So I think you're absolutely right. We do need to be cautious of certain parts of society, but we do also then you can see a path that digital wallets are actually a way of potentially bringing people into more and more, bringing the unbanked more into the financial system.
Yeah, and I think this is more of a comment from a casual observer like me looking in. Like, if we look at what's happening with the telcos, I know Telstra, all their payphones in Australia right now, there's no cost to use a payphone. So you just think longer term, will there be something that banks do for traditional means of cash and banking that we just can't even think of right now? So I think I just want to plant that seed with everyone. Because it's no different to any other technology right now. I do want to move on to buy now, pay later. Now, buy now, pay later. It is, if you've seen Zoolander, it is so hot right now, Hansel. Everyone's talking about it. It's out there. It's happening. I was walking to get a coffee this morning in Melbourne, and there's a big billboard, PayPal, buy now, pay later, all that stuff. Phil, why is it so popular in Australia and New Zealand?
I think there's a couple of reasons. I think first and foremost, extremely early adopters off the back of some of the biggest global platforms that are out there. I just think, the fintech space in Australia and New Zealand has been red hot in many places, but in particular, some of the players that have come out of Australia and New Zealand have clearly become globally dominant. And so I think when you look at early adoption, you've got obviously the Scandics, which again, were off the back of Klarna, UK, Germany, again, all locally driven by some excellent fintech. So I think that's one of the major pieces. To me as well, and this actually ties to your comment of your survey actually, is that, clearly it's an extremely digitally native population across both Australia and New Zealand, high internet access, high mobile usage. And again, if you look at the younger generation who are typically sitting behind the back of many of these transactions, and that is changing, but typically, again, they are really sort of driving a change. And I think what you've also seen is that proliferation of different types of buy now, pay later. You've got the pure plays, you've got the banks jumping in now, you've got retailers. Everybody is there, whether a white labeling a solution, whatever it may be. It's just everywhere you look. So I think that coupled with the retail partnership that are in place, it kind of explains the growth to me and how hot it is.
Yeah. Now, I want anyone to also get ready to jump in with a question, but I've got a question for Phil on this, just again, from a casual observer. At the moment, particularly in Australia and somewhat New Zealand, you can look in and say, buy now, pay later, it's not regulated. I had a government senator, Andrew Bragg, on my podcast, and he said, well, they are regulated, they've got a license and all that, but it's not a formal credit check and whatnot. The government, particularly in Australia, they're a little bit hedging our bet with this thing, because obviously governments are in, they'd like to think they're on the good side of banks or whatnot. Like, do you see any, I guess, chatter in your world around tightening the, I guess, the requirements and the legislation stuff for buy now, pay later?
Absolutely. And again, Australia is probably leading in terms of those conversations. But I just think, even here in Singapore, the MAS has started to sort of look into regulation of these payment types. And it's only natural. You see such a huge growth. You see such a huge user following all of a sudden, and huge media hype behind the back of it. I think just given the shape of the model, that people are actually going to look into it. Again, our role in the ecosystem obviously is not one of sort of arbitrary. We are here to ensure that we provide our merchants access to their customers, and if their customers are using buy now, pay later, it's our role in the ecosystem to do that, not to judge. But at the same time, when I speak to a number of these players across the region, they welcome the regulations, they welcome the transparency, and they welcome being able to I guess sort of change the face of the industry as being part of it. So I think it's coming without a shadow of a doubt. It's here in many places already. So I think it's only a matter of time.
Well, we might give. I'll say one thing, Phil. Did you have anything else you would like to add surrounding buy now, pay later? Because I just want to move into embedded finance with Adrian and whatnot. But did you want to add anything that maybe I haven't asked you?
No, look, I think, as I say, we're predicting the growth. This region continues to lead the way on that side of it. And, I think what we will see in the future is just that growth into, more and more different types of verticals. So yeah, no, it's exciting time, always is, but I'm going to be quiet and let Adrian speak.
All right, Adrian, welcome to the party. This buy now, pay later, it is a marketer's delight, isn't it? It's just, I can have it now and worry about it later. There's nothing better than that. Now, particularly in Australia and New Zealand and other countries, we've seen this mashing of new fintech with traditional banking, where the bankers we're just going to focus on what we like to do and banking and keeping a ledger, and the fintech's doing the front end. I guess my kind of point is, apart from it being a threat, how is BNPL, buy now, pay later, an opportunity for banks?
Yeah, thanks, Glenn. I think if I probably should step back for a sec. I mean, obviously, we've all gone through the last 2 years with COVID, and we see that acceleration to digitization. I know there's far too many ons in that sentence, but ultimately, in terms of the banks and how they bring those kind of customer-centric products to market, they're in a situation now where they're competing against fintechs, competing against telcos, competing against retailers, all for the same business, right? And so at the end of the day, they've got to be innovative in the products and services that they offer. And if we look at the last 2 years, I know when I'm speaking to the banks, they've kind of accelerated like 6-7 years worth of digitization into the past sort of 6 to 8 months, right? Because and BNPL is just a really another good example of that, and that embedded finance concept where that's being offered by other organizations, and if the banks don't come to play, they're going to lose those customers, right? And a big part of that then is the banks have to look internally to say, what kind of systems am I running that enable me to compete in that space? Because typically, most of the systems the banks are running to be able to offer those products and services are kind of, legacy mainframe based technology, where to change that, it's coding, it's going to IT with a request, it's not with the customer facing people. So the banks are having to kind of look at themselves and go, right, what is my internal infrastructure and what is my technology to be able to compete in this space? Otherwise, they're just going to get left behind, and people are going to go and procure those services from somebody else.
Yeah, and it's fascinating to think, right? Like if we go back in time, it's the same story with Apple with the iPod, right? Like if only Sony had the hardware, and if only Sony had the music catalog and merged them together, like if only the banks had this reputation of money and only this big customer base, like it's just fascinating to see the banks are now slower to this party. Are you seeing that there is a shift in other areas of banking where they are actually waking up?
I think so, Glenn. I mean, you've only got to look at the rise of the neobank, right? I mean, if anything's going to wake the large banks up, it's that. You look at how the tranche of new licenses for neobanks has gone through the whole of APAC, right? It started in places like Hong Kong, moved through Singapore, moved through Malaysia. Australia was one of the first adopters. I'm actually in Thailand at the moment. They've just issued a government paper opening up the whole banking ecosystem, right? Issuing a load of new banking licenses. So obviously the banks will go for those licenses as well, but you'll also see organizations like Uber and Grab going to launch a bank, right? And where they've got an inherent customer base as well that's ready to move, right? And if you're offering banking services in the same way that you can order food or jump in the back of a car, great, right? And to your point on the millennials, that's going to appeal more than potentially an old kind of the old image of a traditional bank. So the banks have got to reinvent themselves again. So whether that's, with a new brand, whether that's some kind of white label service, or even just looking at their fundamental services they do at the moment, they have to, they've got to reinvent themselves. And then, to go back to what I said earlier, they have to look internally and say, the kind of systems that I'm operating, how do I reinvent myself really quickly? And most importantly, how do I react to the market quickly? Can I launch a new product and service like that? Because the new guys can, right? The new guys can do that because they don't have the legacy frameworks and stuff to deal with that the large banks do. So.
Yeah, and I think really with this mashing of fintech and traditional banking, from my perspective, banking nowadays, it's a who's the best marketer, who's the best user experience. The banking side of it, the ledger side of it, that's taken as read. That's boring. So I guess I want to know, like, how is it actually changing the competitive landscape for some of these big players with these startup companies? Because we know that, and I'm kind of ranting, but I just want to get my point across for you to have a think about. We know that some of these big incumbent banks are so big that the crumbs off the table will sustain a startup company. Like, this is real money, right?
Yeah. Yeah. I mean, I think then there's often a statement in it that we'll always need banking, but will we need banks? Right. And that's an interesting viewpoint as far as consuming those kind of services, right? And you're right. I mean, a lot of the new fintechs and startup banks, they're offering like one product, but that product, in the same way as I really like Japan, right? And you go to Japan and you go to a Japanese restaurant, he specializes in one thing, right? Tempura, really, really good, right? Doesn't do anything else. You look at the banks and the niche, the niche fintechs. It's like one product or one service and one alignment to a particular retailer or one channel. And again, that appeals if it's done really well, right? And most of those neo and fintech operations, again, from a technology side, the use of cloud is now what enables them to really move forward quickly. So, adopting cloud banking services, and being able to kind of consume those really quickly and then launch those really quickly, because you're not looking after your infrastructure anymore. You're just consuming that infrastructure from the cloud. And so again, a lot of the banks are looking at how they manage their own systems and whether or not they need to continue to invest in running it rather than the outcome, because the customers don't care about how you run your systems. They just care about the outcome and the services you give them, right? So the banks, again, it's a mind shift change to kind of say, where do I want to invest my money, right? Where do I want to invest my people? Is it in running like hardware and things like that, or is it actually about focusing on my customers? And that focusing on the customer element moves you towards consuming technology in a different way as well.
Yeah, and I will open it up for questions to Adrian in a moment, but I think it's interesting, Adrian, from a banking point of view, banks traditionally make their money from lending out money and charging interest and making a spread, right?
Yeah.
Is the trend with millennials and buy now, pay later and Gen Z that I don't pay interest when I borrow money. So these incumbent banks, there needs to be other revenue streams possibly in the future.
Yep. Yeah.
So,
I mean, exactly. I mean, that's that thing, Glenn, where, you see a good example here. I'll just use a Thailand example here. That their version of WhatsApp is called Line, and banks use a Line account and they link that straight into a telco or a retailer or a public transport system. So it's seamless, right? It's a seamless experience for the customer, but obviously the tie-in with all of those organizations gives the opportunity for the bank, to provide, finance, for example, into that structure. But also it's about engaging the customer, with that overall experience. So actually, sometimes the bank brand gets lost, and actually quite often the bank's happy for that bank brand to get lost, right? Because it's just part of them consuming, services. And to your point, from the next generation of customers, if they don't want to pay interest, the bank has to look at how they're going to make a profit, right? And ultimately how they're going to do that is by kind of value-added services that are customer-centric. So it's not something off the shelf that everybody just consumes. It's individualized for that person, and because if it's not, they won't consume it.